Good morning, my fellow crypto traders, brothers and sisters. All right, so let's talk about the Bitcoin. This week, really, honestly, it's all about the Fed. Yeah, even in the crypto space, because obviously the broader markets and the broader market sentiment reflects seriously on the crypto space. All right, so let's take a look at what we have going on here. Actually, before we do that, let's jump to the dollar because it is all about the dollar. All right, and so what do we have going on here? We broke to the upside of this bullish flag. Previously, I expected us to turn back around, and typically we will test the top side of that flag as support before bouncing up and going further. The dollar, however, has been so strong, incredibly strong. It just has gone parabolic, really. And for the first time since I think it was 2017, we have hit the 103 index mark, whatever it's called here. This line up above us, this black descending line, let me see if I can zoom out a little bit. All right, so yes, here's our previous hit, and that was, end of 2016, 2017. If I zoom out even further, well, I don't know if it's going to do that. No, it just stopped on me. I can go to the weekly here. I want to show you the last time we hit that black descending line was in 2001, 2002. So over 20 years it has been since we have touched that black descending line. I do expect, now obviously it's all pending Jay Powell and the Fed's decisions here during the course of this year. They've stated that they are becoming more hawkish because of inflation. So more hawkish on the dollar and more playing more defensively against inflation, which means that the market, and the market has obviously priced this in already, is expecting a pretty significant rate increase. Now, the question that I pose is, what if the market is overreacting here a bit and Jay Powell and the Fed goes 25 basis points lighter than expected? That's when we will see a huge pop in the markets. And I think that might at least, obviously it's a possibility, but it's growing closer and closer to a probability because of how reactive the market is up here in these prices. All right, so what the Fed doesn't want to do is, the U.S. is the hugest real estate market on the planet. So if the real estate market crashes or crumbles again, that will put us into a global recession. The U.S., everything kind of the fulcrum of the global economy right now, unfortunately, or maybe fortunately, depending perspective, rides on how well the U.S. real estate market does. All right, so Jay Powell and the Fed have to be very careful how they manipulate these markets. And obviously all this uncertainty is reflected in the VIX here. The VIX is up again by 1%, though we do have a shooting star candle pattern here, which is a good sign. We need some relief on this VIX. We just have lived in fear for the last, since November, really. We've seen lots of spikes here, and so the markets are ready to see some good news, and let's just hope that Jay Powell and company follow through. Good thing that I see is silver and gold. have gone way down, have dropped way down. And that's also a reflection, though, of how the market thinks that Jay Powell and the Fed are going to tackle inflation. So the market is expecting a pretty good rate increase here. And what I am wondering, as I've stated, is if we get 25 basis points less than what the market expects. I think that will shoot us up. All right, Dow, SPY. Now, I don't really have anything new to say about these. So let's just jump into Bitcoin and go over a few things that I have spotted potentially new since the last time I have spoken to you guys. First thing, I got something here on my clipboard. Yeah. Let's take a look at this. All right, let me expand this. This is from Glassnode. Another little something just to, factor into your equation as a variable as you help you to determine what the price in the future will look like. So this is the Bitcoin mining difficulty, and you can see the hash rate here has grown. It really has gone parabolic here. It has just gone straight up. Now, the gray line here is the Bitcoin price, okay? Reflected in USD. And you can see that we have rarely gone below that hash rate mining difficulty, even in bear markets. I did hear for a time in 2020. That was probably the longest spell that we have spent under that Bitcoin hash rate in terms of difficulty and reflected in the price here. I'm not saying that. I didn't say that right. That was the first time that we really spent significant amount of time under the mining difficulty. All right. And every time when we've seen these moves where hash rate or mining difficulty moves up, the price tends to follow. All right. And so, you can see here, hash rate goes up, we popped and we hit a new high. Hash rate goes up, price follows. Hash rate goes up, price follows. And now hash rate has gone exponential. And so can we say that the pattern will continue? I don't know. I think it's a fair assessment, at least, and I thought it was worth considering. All right. So the other thing that is new since my last video update is we have dropped below and confirmed our move below this black line. Now, I've said all along, as soon as we drop below and confirm, that's when I start to go bearish. Now, let's talk about this. Did I sell and actually follow through with what I've been saying all along? The answer is no, I did not. Why? Let's talk about that. Well, Bitcoin threw another curveball at me, actually 3 of them here, which are all bullish indicators. And you can see we're currently up, banging our heads against that line right now as I do this video. We have, first of all, this descending wedge, which I believe I put in the last video. And that is a bullish pattern, all right? Now, descending wedges don't always play out. If you watched how many of the altcoins from my this week's hotness list last week actually dumped, you'll see that a couple of them actually fell to the downside of these descending wedges. All right, so it's not always the case, obviously. This is all about measuring probability. It's not telling us, it's not giving us a promise as to what the future price action will be. It's what is the greater probability. So a descending wedge is bullish, and the greatest probability for price action is to pop to the top side of those descending wedges. But that does not always happen. And being that we're on the downside of my descending trend line, it's very well, what happened here? It's very well probable, or maybe I should say possible. Why is it not drawing my... All right, I just wanted to highlight that area right there. That we may drop to the downside of this wedge. In either case, my response here is not to sell until we have a move confirmed either to the top side of that wedge or the bottom side of the wedge. All right. If we move to the top side of this descending wedge, I think that'll give us enough momentum to pop back through and above that ascending black trend line. All right. You guys all know I did not want to see us down here again. And the reason why is because I felt we would break that trend line. And that's what happened. I mean, we've hit it now in the past 4 months, 18 different times, depending on how you, but 18 different candles have hit this trend line and it's held. And just like I always allude to, the analogy I use is a jackhammer. You can hit cement so many times with a jackhammer. If it's strong, it'll take a lot more work to break through. And this is a strong trend line that I've drawn since October of 2019. All right, so 2.5 years we've been in existence. It's going to take a lot of work to break below. But I felt that if we hit that trend line again, we would break below it. And sure enough, we have. So now the market is all uncertain. We don't know what this Fed is going to do on Wednesday. And that's what we're essentially waiting for. All right. So I have a feeling we exist inside of this wedge until at least Wednesday. And then that's when the market will make their more of a reactive decision. Did they properly factor in what they expected the Fed to do, or did they not? All right. And if they did not negatively, then we break to the downside. And if they did not positively, in other words, the Fed does not raise the rates as much as what they expected, we break to the upside. And that gives us the momentum to get back into or over that ascending black trend line. All right, so that's kind of why I don't want to sell yet. I don't want to just up and sell everything, because this could be, we just don't know what Jay Powell and company are going to do. All right, so the descending wedge, I've spent enough time talking about that in my analysis here. The other thing is, that black ascending trend line coincides with this 47 level of resistance on our RSI. Pretty significant. All right, hit it once here, almost again here, another time here, another time here, another time here. All those times we could not break. So that is a level of resistance that just, again, like breaking down below the ascending black trend line, it takes us a number of times to hit our heads against before we break to the upside. And sometimes we just don't have enough strength. The bulls don't have enough strength to do that. So my line in the sand right now, a break below this wedge means a break below this 37,550 support. That's kind of my line in the sand at this point, because that means instead of continuing upwards like all these red circles indicate, we now start to flatten out and then possibly break lower. All right, that's what we don't want to see. We don't want to see a trend line like that. So last time we hit this line at 37,550, we went up. And we definitely don't want to break below that line. That's super significant, guys. Write that number down if you're taking notes. 37,550. We got to stay above that. A break below that also takes us below our descending wedge. All right, so we want to stay to the top side of that for sure. Now there's one more thing here I want to show you in this update, this video. Where is my, there it is. Nope. There it is. All right, I want to increase this, show you something here in terms of hidden bullish divergence. All right, so if we go here on the 11th of April, you can see I've got this purple ascending line measuring the waves on the RSI here. First time we hit it, our price was at our low we had closed at was 39,500-ish. All right, and now we are all the way down at 38,800. But look at this. Our RSI continues to trend up, not down like the price, but up. So that all this signifies right here is hidden bullish divergence in our RSI chart. I have not heard too many people talk about this, but yeah, we have almost a month of hidden bullish divergence. It's significant. It's something to take note of. These are things that sometimes people overlook, but they could be the determining factor. Is this hidden bullish divergence telling us what maybe Jay Powell and the Fed will do? We'll find out, but definitely something to consider and also weigh into your reaction here in terms of price fade. All right, enough rambling about Bitcoin. Let's jump to our concluding chart here. All right, so the situation in the market is obviously extremely uncertain with the Fed's decision looming and the announcement coming this week, I believe on Wednesday, right? You're not wrong to sell here. I'm not telling anybody they're wrong to sell here. Not at all. But I am not, as I've stated, unless we drop below that 37,550 mark and confirm. We need the confirmation on the daily because I am a swing trader. So the daily chart is my primary chart for, to determine these swing trades. I'll jump down to the 4-hour to determine entries or exits. I'll jump to the weekly sometimes to see an overarching view. But the daily is what my prime chart basis is off. And, at the very least, you're going to want to play this price action defensively because we are below a significant trend line now. And that's very concerning. You have to watch that closely. So you're not wrong to sell, but at least you want to play very defensively. Let's see, where am I at? I'm not going to sell unless we break to the downside. And if we break to the upside, that's a good thing of that descending wedge. That'll take us back into that whole area there. And I consider that very bullish. Until then, guys, stay safe in your trading. Some of you have played this much smarter than I have. And that's I'm happy for you, and I love seeing those professionals in my paid subscribers group show different charts. Even this descending wedge is something that I picked off of one of my traders in our paid subscribers group. So if you are a paid subscriber, you're not in that group, please join. I'll put a link in the description. Until the next video, guys, peace. Stay safe out there.